I'm curious, what are the legalities if someone who is an executive in a company who buys and sells shares of their own company? Yeah, they're allowed to do it, but they have to issue a special SEC form. And I think it's called a Form 4. And if you buy shares over time, or if you sell shares slowly over time, part of planned sales, that's called a 10b5 program. And so whenever you see sales through 10b5s, don't freak out, because the management of that company or whoever's selling those shares internally to that company, 99.9% of their net worth is in that company. So planned sales are done slowly over time, regardless of if the news is positive or negative coming out from that company. Now, when you see massive sales like you saw with Elon Musk, that's a bigger deal. It's a bigger deal. And I believe thoroughly in something called behavioral finance. And what that means is it means investing in companies when you see management, the management team buying massive stakes in their own company, and vice versa too. Yeah, it's something called behavioral finance. And there's a mutual fund that one of my best friends growing up works at. I think he runs most of it now, called Fuller and Taylor out here in the Bay Area. And that was founded by Dick Fuller and Richard Taylor. And they just received a Nobel Prize in Finance for behavioral finance. So you can look them up if you want to. But what they do is they tend to vote with their wallet. They invest in companies where management is buying a lot of shares internally. But if you ever see a 10b5, don't worry about that. Don't worry about that. But if you see somebody like Elon Musk buying a massive amount of Tesla, then you probably want to buy Tesla too. And that's what happened in March of last year. But certain executives are different too. Like for many years, I remember I used to go long and short Activision, ticker ATVI. And I met with this guy, Bobby Kotick, who's in the press now for unfortunate reasons. But I met with him a number of times over the years when I used to invest in his company. And I remember every time he bought shares or sold shares in Activision, 6 to 12 months later, the stock would either outperform or underperform based on whether he bought or sold. And I remember I met with him once. I said, Bobby, I see you're selling a lot of shares. How should we think about this from an investment perspective? And he said, I don't know what to say. My wife has expensive tastes. That's actually what he said. But there are certain executives you can follow and you can back test it as well to see if they sell or buy shares at optimal times. And the same thing with corporate finance departments. Like, for example, whenever IBM does massive M&A, historically, and I have back tested this as an investor years ago, whenever IBM does massive acquisitions, it usually means the market has bottomed. Not always, but many times. I'll give you examples. So in the summer of 2006, May or June of 2006, you had a rookie Fed chairman at the time, Ben Bernanke. And he raised rates too early and people freaked out and the market crashed temporarily. And so what happened was in 2006, IBM bought a couple of companies, right? ISS is one of them, and Cognos is the other one, COGN, yeah. And so that kind of marked the bottom. You know, one data point doesn't make a trend. They've done it before. In 2002 and 2003, when the markets were in free fall, before the Statue of Saddam fell, IBM bought PwC for a couple billion. That marked the bottom. IBM did it again in early 2009 when they announced they were buying Sun Microsystems, and eventually Oracle trumped them on that deal. But that kind of marked the bottom as well for the markets. Yeah. So the bottom line is you can look at certain executives' buying and selling patterns and certain corporations and corporate finance departments in terms of buying companies to kind of understand what the market is going to do next, or more importantly, that company itself.